If you really want to know what's going on with the US economy, honestly, there's no better place to look than the earnings report from its biggest bank. So today, we're going to dive into JPMorgan Chase's latest results, which were, well, a blockbuster. We'll explore what it tells us about the health of our money, our businesses, and maybe some of the risks that are lurking just over the horizon. Okay, let's just start with the headline number, because it is a monster. In just the third quarter of 2025, JPMorgan Chase raked in a staggering $14.4 billion in net income. That's pure profit. To put that into perspective for you, that's over $150 million in profit every single day. Wow. The money machine is definitely running at full speed. And here it is, straight from the top. The chairman and CEO, Jamie Dimon, calls the results strong. You know, that 20% ROTCE number? That's just a fancy metric for investors. But all it really means is that the bank is exceptionally good at turning the money it has into even more money. So right off the bat, the first part of our story is crystal clear. Business is absolutely booming. So how'd they pull that off? Where did all that cash actually come from? Let's peel back the layers and look inside the bank's main divisions. All right, this chart really tells the story. You can see the biggest engine here was the commercial and investment bank. That's kind of the Wall Street side of things, bringing in a massive $6.9 billion. But right behind it is the consumer and community banking division. That's the part that most of us actually interact with, and it brought in a very, very healthy $5 billion. And speaking of the consumer side, it is an absolute fortress. For the fifth year in a row, more Americans trust JPMorgan Chase with their deposits than any other bank. And look, that isn't just a bragging right. It's a huge source of stable, low-cost cash that basically fuels the rest of the bank's operations. But the real star of the show this quarter, it was the investment bank. They had a record-breaking third quarter, with almost $9 billion in revenue just from their markets division. What that means is their traders just had an incredible run, with tons of client activity in both stocks and bonds. When the markets get busy, JPMorgan cashes in.
And hey, let's not forget the wealth management arm. They pulled in an incredible $109 billion in new client money this quarter. That shows that even with all the jitters in the economy, wealthy folks and big institutions are still confident enough to put huge amounts of money to work with the firm.
So the bank is firing on all cylinders. Everything's great, case closed, right? Well, not exactly. This is where the story starts to shift, and all that sunshine gives way to some pretty ominous-looking clouds on the horizon. And here's the pivot, again in Jamie Dimon's own words. He says the economy is resilient, but then he immediately points to a heightened degree of uncertainty. This is the real tension of the whole report. Things are great right now, but the future is unusually foggy. And the crucial thing here is that the people with the best view of the global economy are starting to get nervous. And this slide just lays out that tension perfectly. On one side, you have the facts on the ground today. Consumers are strong, spending is solid, people are paying their bills. But on the other side, you have the fears for tomorrow, all the global conflicts, inflation that just won't go away, and a job market that might be starting to cool off. You know, one of the most fascinating details from their discussion was this description of the labor market, a low hiring, low firing moment. So what does that even mean? Well, it suggests that businesses are hesitating. They're not confident enough to go on a big hiring spree, but things aren't bad enough to start laying people off either. It's like the whole economy is in a holding pattern, just waiting to see what happens next. Now, among all these big picture risks, the executives highlighted one very specific problem, one they actually compared to finding a cockroach in your kitchen. So first, we gotta understand this term non-bank financial institution, or NBFI. You can just think of it as the shadow banking system. These are companies that lend money, like private credit funds, but they do it without the same level of heavy regulation that a traditional bank like JPMorgan has. This whole sector has exploded in size, and without that same strict oversight, it's a lot harder to know if the loans they're making are actually any good. And here is exactly why that matters. On the earnings call, the bank revealed that a problem at just one of these NBFIs, a company called Tricolor, forced JPMorgan to write off $170 million in loans. This is a real-world example of how trouble brewing in these less regulated corners of finance can suddenly spill over and hit even the biggest players. And that brings us to Jamie Dimon's chilling conclusion on the topic. He warned, when you see one cockroach, there are probably more. It's a really stark warning that there could be other hidden problems just festering inside this less visible part of the financial system. So, we have a record quarter for the bank, but at the same time, a pretty clear warning about the future. What are the key things we should all be taking away from this? Okay, let's put it all together. First, no question about it, the bank is wildly profitable. Second, that's happening largely because the American consumer is still strong and spending money. But, and this is a really big but, the bank itself isn't celebrating. It's actively preparing for potential trouble. And finally, that cockroach problem in private credit, that's a risk that everyone should probably have on their radar now. So I think the ultimate question this leaves us with is this. One of the world's most sophisticated financial institutions sees clear skies today, but is stocking up on sandbags and boarding up the windows for a potential storm tomorrow. What should that tell the rest of us about how we should be preparing?